Historically, there's been a really loud group of hardcore Bitcoiners that see it as a sole store of value asset and a digital gold, which I generally agree with. But when you think of when Bitcoin launched, it was meant to be a new monetary network and meant to do a lot more than a store of value. It's programmable. On Core Chain, you're going to have a variety of different yield opportunities. For example, Core started the year last year with I think like 3 or 4 million in TVL on chain. We're now sitting just shy of a billion. That's a lot of growth. So I think it's growing pretty fast, but it's all on an exponential curve.
Today's episode is brought to you by Akash Network, the world's premier decentralized compute marketplace. Check out Akash to buy and sell computing resources securely and efficiently. Purpose-built for public utility at akash.network. All right, one of the big themes in 2025 is all about what you can do with your Bitcoin as the market continues to grow, and super excited to have on with us Core DAO initial contributor, Brendon Sedo, on Coinage making his debut. Brendon, good to see you, man. Welcome.
Thank you, Zach. Appreciate it. Brand new year, new energy. So excited about talking about anything that's going to be happening in 2025, all the excitement around Bitcoin. It's going to be a big year, I think.
Yeah, and it's tough to follow what already happened in 2024, which was already a big year. But nonetheless, people super excited about what is to come. Not just really what y'all are up to at Core, but I think in the space writ large. So excited to dig into all of that. But for maybe people who don't really understand what's really going on, maybe we start with Core first, what people should know about it, what it's unlocking, and then we can get into everything else. But first, maybe if you want to give the background on Core, your background, and why it's maybe something to watch this year.
Yeah, let me quickly introduce myself and then jump into Core. I'll make myself really short. So, Brendon, one of the initial contributors at Core, I've been with the project for a couple of years now before we launched. The team was really small. Currently heading up institutional BD and then Core Ventures, where we invest in people actually building on Bitcoin. And before that was a founder CEO of a tech startup. So I've been in tech about 15 years, ran a company called Joist for about 9 years, raised multiple rounds of funding, and then sold it to a group backed by Silver Lake in 2019. Crypto had always been kind of a side passion, heavy Bitcoiner. Got connected with the group building at Core, and the mission just really resonated. So that kind of leads me to Core and what Core is trying to build. So I think what you're seeing, just to kind of set the table, is Bitcoin growing as an asset class. I think it's gone upwards of 2 trillion in value. I haven't checked the price today, but it's a pretty massive market cap. You're seeing institutions buy. You're seeing this global demand for this non-sovereign store of value grow all around the world. And now what you're seeing is people want to do more with Bitcoin. There was the launch of ordinals, which are kind of like Bitcoin version of NFTs and other interesting use cases. There's kind of this growing demand for Bitcoin, the asset, and then a growing demand to do things with it. But the thing is, the Bitcoin network is inherently limited in what it can do. It's very great, most decentralized and secured network, fair launch, but it's unable to do smart contracts or have high throughput. So enter in scaling chains or scaling layers. So Core is a scaling layer. It's EVM compatible. It's secured by Bitcoin. So specifically, Bitcoin miners secure the chain with hash rate and hash power. And then as a Bitcoin holder, you can also get involved in Core by staking Bitcoin on the Bitcoin network itself, help secure the chain. And because it's EVM compatible, it has smart contracts. So you can enable a bunch of use cases that aren't possible on the Bitcoin network itself. You can execute all these awesome use cases, dApps, build things on Core, while retaining the decentralization security of Bitcoin. So what we're saying is you can keep all the great things that make the Bitcoin network great, and now you can enable all these use cases on Core that you've always wanted on Bitcoin, but just aren't possible right now.
Yeah, and how, I guess, obviously, again, as so much money flows into Bitcoin as we saw last year, it seems to make the opportunity to do anything in that space much larger, provided, of course, maybe some people start to use their Bitcoin. And maybe it's true, maybe it's not, but you get the sense that a lot of Bitcoiners are more in the kind of just hold it and forget it camps. that really don't ever like doing anything with their Bitcoin. But it seems like maybe some of that's changing now. Specifically with Core, I guess, in the way that it is built. We've talked to Manoob from Stacks before, this idea of kind of, leveraging Bitcoin to earn yield, and earning native Bitcoin, which I think is interesting. Correct me if I'm wrong, but maybe how does Core look at maybe other ways to unlock some of that? Because I think you earn Core tokens, if I'm not mistaken. But
Yep.
what is kind of like the structure that is differentiated from Stacks, maybe other Bitcoin L2s as they've come up?
Yeah, so there's a lot there. I'll just kind of talk to the first point, which is like the different archetypes of Bitcoin holders. I think historically there's been a really loud group of hardcore Bitcoiners that see it as a sole store of value asset and a digital gold, which I generally agree with. But when you think of when Bitcoin launched, it was meant to be a new monetary network and meant to do a lot more than a store of value. It's programmable, it's natively digital, and it can do a lot more than gold can. So it's great that it is seen as a digital store of value. But again, the vision was always bigger, and there's a lot more that you can do with this programmable asset. So I just wanted to set the stage there. And what you'll see is there's different cohorts of Bitcoiners. There's funds, there's whales, there's certain people that just want to have it sit in a ledger and let it be. There's others that are actively looking to turn their Bitcoin into a yield producing asset and something that's, you know, working for them. And I think you're only going to see that grow as that asset matures. People want to earn yield on every asset they possibly have, whether it's real estate, uh, stocks, other bonds, et cetera. They want it to compound and grow over time. So I think that's really exciting and one of the key tailwinds kind of behind Bitcoin right now. So how does Core enable that, and like how do we see the future? So I see we generally see a lot of use cases and Bitcoin use cases that'll be executed on Bitcoin scaling chains like Core. You could see money markets, you can see, you know, um, Bitcoin trading and derivatives, basically all these great smart contract use cases that you can't do on Bitcoin, but you could feasibly see. But the first step we think is yield, right? Folks want to turn it into a yield producing asset. On Core, one of the great things you can do is because Bitcoin is part of our consensus, we were the first to launch a non-custodial staking system. So as you know, Bitcoin itself is run by miners. There's no native yield like Ethereum. There's no staking component, right? With Core, what you can do is stake Bitcoin directly on the Bitcoin network using a time lock, so a hash time lock. So what that means is you don't need to wrap, bridge, or give up custody of your Bitcoin in any way. It actually just stays in your wallet. You issue a time lock for a specific period of time, in the and then you issue some other data in terms of which validator you want to delegate to on Core in the OP return field, and you lock your Bitcoin up, so you have the peace of mind of knowing that it hasn't left your wallet, but it's time locked, so you can't use it until the time lock expires. By participating in Core's consensus, you're helping secure the network, and you earn a portion of our block rewards. So that's super sustainable yield. It's
Mm-hmm.
not coming out of liquidity incentives or some other random pool of funds. It's part of our programmed block rewards. So you can think of it as like a risk-free rate for Bitcoin that doesn't require you to give up custody of your Bitcoin. It's literally the risk-free rate of what you can do with your Bitcoin right now. And then what we see is a bunch of other use cases from there, right? You can give up custody, you can go into a Bitcoin LST, you can bridge into one of these Bitcoin derivatives and come on Core Chain and do some more degen activities. Those will be higher yields, but there'll be different trust assumptions. And we
Yeah.
think that there'll be a bunch of different products that kind of cater to different types of Bitcoin users. But we're really excited about non-custodial staking because it's a great first step and brings a native yield to Bitcoin for the first time.
Yeah, I think that that's one of the interesting things as we see this evolution from like Bitcoin being solely digital gold to now kind of venturing into what Ethereum pioneered in terms of programmable money, I suppose, and kind of using it in a different way and proof of stake. And now seeing some of those experiments spill over into the Bitcoin spheres. It's pretty interesting because that dynamic is going to have to change. You're going to have to look at it maybe perhaps as something different maybe than digital gold, I suppose. And I
Digital Gold
guess,
Plus, I
yeah,
don't know
digital
what the
gold
term is,
plus,
but
and what does it even mean to be digital gold? You can use gold in different ways, and so I guess everyone's kind of experimenting and learning as we go. But Brendon, one of the things too that's completely changed, I suppose, is kind of the large holders of Bitcoin look entirely different than maybe they did at the beginning of 2014 when you have BlackRock completely surging, when you have MicroStrategy buying up more and more. I kind of want to get your
yeah.
take on in terms of short-term drivers for everyone building in Bitcoin and kind of what matter to you and what people should be paying attention to. We had Hester Peirce, SEC Commissioner Peirce, on the show just a couple weeks ago, talking about what might happen in 25 under a new SEC and changing some of the rules in what people like a BlackRock or all the other ETF issuers might be able to do with that Bitcoin. And I think that will trigger a lot of money flowing into these projects, but just want to play what she told us around maybe the SEC changing those rules and then get your take on what it could mean for builders such as Core on the other side. Take a listen to what she told us about the SEC potentially changing the ability for some of those issuers to stake Bitcoin. Here's what she told us.
It's something that people raise with me pretty frequently, so I imagine that question is going to be posed to us early on. And as I said, I'm open to reconsidering both in kind and staking to think about, again, how can you allow people to design the products in the way that's most useful to the investors in those products. Certainly, if you're able to, I mean, if it changes from a majority of commissioners who don't want things to go through to a majority of commissioners who do want things to go through, then yeah, it's easier.
And so, if it gets easier at the SEC, Brendon, to greenlight some of these things, it's a huge unlock because you got billions and billions of dollars just sitting there not doing anything. And potentially, if they can do stuff with that, I assume it's a huge boost to projects like Core, like Stacks, like all the other Bitcoin-related projects now. How do you maybe look at that being a huge unlock, or maybe is it not even necessary?
Yeah, so in regards to those comments, I don't have the full context, but it sounds like it was probably around staking of ETPs, whether it's ETH, Bitcoin, etc. Um, I think it's going to take some time probably to get there. I don't know the exact time frame, but it seems inevitable that uh, eventually these products will be upgraded, and Core ultimately sees ourselves down the road as one of those yield opportunities for these funds. We already have a yield bearing ETP in Europe, which is different than an ETF. So again, folks can buy Bitcoin, get exposure to this in their brokerage account with a native yield of like 3%. And that product's already live today. So it seems like it's only a matter of time before that comes to products in the US, but obviously regs are a bit different. So it's obviously a huge boost. I think the important part and the key distinction here is, Core's approach is unique in that it's not putting any Bitcoin assets at risk, right, by using a time lock. There's no slashing risk. There's no custody risk. Um, it's literally using a time lock in your own wallet. So it's really a risk-free yield on your Bitcoin. And when you think of products like that, I don't think that folks are going to be very comfortable with risky lending solutions or anything that can put these products at risk. So I think it bodes really well for products like Core, which is really the only non-custodial staking product on the market today, only risk-free yield for Bitcoin, for products and inclusion of things like staking and the expansion of staking for these ETF products. So that's what we're seeing. We're going to patiently wait. We're obviously expanding ETP products in other parts of the world through different ETP issuers, and
Mm-hmm.
excited for any developments that'll be happening in the US and with ETFs.
Yeah, it does seem like, I mean, that's kind of the way that it's been set up is we saw, experiments in Canada and Europe before anything
Yeah.
got greenlit here. US was kind of late to the party in terms of Bitcoin ETFs versus ETPs and followed both those jurisdictions. And so similar, I suppose, in terms of, the context you're talking about was just that was, hey, the US is kind of lag behind. How long will it take for this to happen here? And encouraging, I think, considering how much we saw in terms of the SEC being aggressive against any innovation here in the US. So obviously a lot of people are excited about what we heard from Hester Peirce in changing all that. But it's not just, I guess, the big black rocks that matter here, Brendon. And I guess that's kind of what I'm getting at is what does it look like as the builders in this space start to unlock this capability for other people building on top of Bitcoin. And that's something that we asked Munib from Stacks not too long ago as well. And it basically seemed like he's more excited about the latter. Forget BlackRock and forget all these ETP issuers or ETF issuers, but let's talk about Bitcoin builders. Just want to play what he told us too to get your take, because you sit, as you said, on the venture side. So really want to dig into your take for what you're most excited about in terms of building. But here's what he told us about maybe, look, it's not all about BlackRock. It's about everything else. Here's what Munib said. We'll get your reaction on this side.
But there are a lot of newer L2s. They raise capital. They're doing test nets right now. So there are going to be a lot of like different venues for deploying Bitcoin capital. And I think I'm one of those people. Like I want to see the entire market grow. I want to see the entire Bitcoin L2 market grow. Because if you look at the relative market size, like ETH L2s are something like 80 billion, and Bitcoin L2s are 4 or 5, and I think Stacks might be like 80% of it. And we want to see a place where the entire market of L2s grows to like 50, 100 billion or more. And I think you need a lot of players for a category to grow as a category. And I think so. I feel like a lot of BTC capital is sitting out there idle. And I think that's likely not actually going to be the bottleneck even.
So from where you sit, Brandon, I mean, what are kind of your most exciting, what are you seeing play out? How quickly has this space kind of evolved? What has you most excited?
Yeah, there's a bunch of things. I'll kind of just talk macro first. So love the clip, by the way. We were on a panel together. I think we were just talking. You were also in Prague where we were
Yeah.
talking the future of Bitcoin. A lot of those thoughts resonate and kind of sit with the core thesis as well. You've got this huge pile of capital, $2 trillion plus dollars that's generally sat idle, right? And folks want to turn that into a yield producing or a productive asset, or get back to the original vision of a new monetary system. Um, so we've said this publicly a few times. We think that the TVL, right, or the amount of Bitcoin deployed on Bitcoin scaling chains and into different DeFi protocols and being put to work will dwarf Ethereum in the next couple of years. And I think I was quoted as like couple being two. I think it's closer to five realistically or more. But if you just look at the sheer size of the amount of capital there, it's a massive opportunity to unlock, right? So there's a lot of latent demand to do things on chain.
Mm-hmm.
So just wanted to set that backdrop, definitely aligned with that. For example, Core started the year last year with I think like 3 or 4 million in TVL on chain. We're now sitting just shy of 1 billion. Like almost a top 10 just general blockchain, leading all Bitcoin sidechains right now. Most products, 150 protocols, tons of great builders. So some of the things that I'm really excited about
Mm-hmm.
personally, because I sit on Core Ventures, are there's a couple themes I'm seeing. The first are like these programmable wallets. You've seen historically we've talked about Bitcoin just kind of being an idle asset. As a result, wallets were kind of designed that way to just kind of securely hold
Mm-hmm.
and store Bitcoin. They're not able to really support ordinals, which has been live for 2 years now,
Yeah.
and a ton of other use cases. They're having trouble staking. So I see this whole next wave of Bitcoin wallets that are built on the native Bitcoin multisig. You still custody yourself, but you get all this native cool new functionality and access to ordinals, core staking, all these great functions that I think is going to be really interesting for, whether it's institutions, large Bitcoin holders, or just your average user that can actually put their Bitcoin to work. So we've made a couple investments there. And
Yeah.
then the other thing that we see is collateralizing Bitcoin or borrowing against Bitcoin to turn it into stable coins, right? So you're seeing at this an Insta level where, it was just announced that I forget the name of the group. It's probably right in front of me, but they're going to be partnering with Tether to kind of open up a trading desk, right, for institutions.
Mm-hmm.
Cantor Fitzgerald, right? But I kind of see that trickling down to every Bitcoin holder, ideally everyone in the world who has access to this asset, where you have Bitcoin, you can easily collateralize it through a DeFi protocol on Core Chain or another scaling layer, and start transacting with stablecoins. That's like a clear use case. You protect your store of value. It's low collateral. It's cheaper. It almost becomes the back end of the money supply, and then you start transacting in stablecoins. And I
Yeah.
think that would be facilitated in wallets, exchanges, through great products. So we're really interested in folks that are building lend borrow solutions or collateralization, Bitcoin backed stable coins and things like that. That's
Yeah.
obviously a big trend and obvious use case.
No, yeah, for sure. And I guess, kind of what you've seen with Tether and the idea of, as the demand grows, they need to back it with something. They've turned to treasuries. And so they keep buying more and more US treasuries and treasuries around the world and Bitcoin as well, I suppose, partial of
Yeah.
that reserve. But very interesting to think about experimentation around, what could be done with Bitcoin backed stables. Obviously introduces risk, perhaps a little bit above treasuries. But I am kind of curious to get your take. If you said that you originally thought it could be 2 years, now 5, seems like things might be taking longer for building. And as you said, from a very ground level, you really do need to kind of build everything that Ethereum had years to build in terms of smart contracts and programmability back on top of Bitcoin. And so it has been very interesting to watch that pendulum swing. I'm kind of curious, as we look at the excitement around projects. I'm looking at the market cap over here on Stacks, kind of caught some wins. Similar timing, by the way, back in March, that Core also caught in terms of market cap. And,
Yep.
Some of that enthusiasm sometimes gets ahead of it, pulls back, and then, you see the market catch up. In timing, why do you think some of this stuff might take longer, Brendon? And kind of what are catalysts that people might need to be on the lookout for in 2025 for where this could accelerate?
I think that's a good question. I said a couple of years, like I think it's always been probably 5 or so, but I think the key thing is like if I just take a step back, you've been able to use Bitcoin on chain for a couple of years, right? Like you've been able to use wrap Bitcoin, use it on Ethereum, put it into like MakerDAO. But
Mm-hmm.
historically, there just hasn't been a lot of opportunities for Bitcoiners on these like Ethereum or other chains, right? Because Bitcoin hasn't been the priority or Bitcoin utility hasn't been a focus. Also, those systems aren't really aligned or accruing value to the Bitcoin network in any way. So I think you've had these opportunities, but the yield just hasn't made sense for the risk to like bridge and deploy into different opportunities, if that makes sense. But you still got like 20 billion or so in Bitcoin derivatives through Wrap Bitcoin, Threshold Bitcoin, and a few others that are out there like Solve. Um, so again, I think it just takes time. I think now what you're seeing with dedicated Bitcoin scaling chains like Core are, ton of great new dApps that are targeted at opportunities and yield for Bitcoin specifically. So you're seeing more Bitcoin come on chain. And I think that ecosystem just needs to mature. Where we went last year at the start of the year to where we are now, again, like 3 million TVL to just under a billion, over 150 projects, protocols, a million plus users a week. That's a lot of growth. So I think it's growing pretty fast, but it's all on an exponential curve.
Mm-hmm.
Um, and I also think that the second key piece that we're looking out for is there are many proposals for better and improved bridging between Bitcoin and side chains like Core or others, right? So there's proposals for BitVM, there's OP-cap proposals that would, again, probably make Bitcoiners a bit more comfortable with bridging into these various solutions. So I think this year it's still early for these solutions to come to fruition, but I think you will see some BitVM bridges that are a bit more comfortable with Bitcoiners to bridge into various DeFi opportunities. And I
Mm-hmm.
think just by doing that, you're going to see a lot of liquidity flow into sidechains like Core. So that's something we're definitely looking into, investing in, and we're seeing some teams that are pretty close to unlocking some better bridging solutions. And that's very exciting for the space and for liquidity to flow into sidechains.
Yeah, I think that is. I mean, we've seen the same thing kind of play out with Ethereum's roadmap this past year around bridging into all the L2s and what that unlocks. And so again,
Yep.
the parallels, the time delay in terms of what's happening in Ethereum and now happening in Bitcoin is getting shorter. So it does seem like the catch up is here now. But I guess when you kind
I
of
think you've
you've
got
already
liquidity and excitement. Sorry to interrupt, but just the sheer amount of liquidity gets people excited and want is attracting a lot of builders, right? So we're talking to world-class builders every day because there's just so much capital and opportunity in the space.
Yeah, no, I mean, it's very clear that that is happening on a daily basis. But I guess, when you think about problems or what you see from a perspective of building problems to avoid. Certainly, there have been things that played out in the Ethereum space that maybe weren't so great as well. No project's perfect, no ecosystem's perfect. But when you look at maybe some things that you're worried about as things scale on Bitcoin, is there anything that jumps out to you in terms of maybe potentially having things go wrong in a cascading type of event? We've seen it play out in crypto time and time again, and I always get nervous from where I sit. But what does Brendon think?
Yeah, it's a good question. I can't say I have a strong opinion on that. And I say this as someone who's been burned multiple times in this industry, playing around and trying things. So the scars are definitely there. So who knows? There's probably some sort of dark horse or thing of this cycle that folks need to be careful of. You need to do your own research and generally be as cautious as you can. But I can't put my finger on exactly what that thing is this cycle, to be completely honest. I think the big thing, the important thing, and what we're trying to support at Core is we definitely see this, this TradFi system, right? We've helped launch yield-bearing ETPs. We see more money flowing into ETFs. We see the potential of yield-bearing ETFs. Core is integrated with multiple custodians, right? Which is like BitGo, Copper, Cactus Custody, and various others coming soon, right? So we've done a lot of investment there because a lot of institutions have Bitcoin. But what we're trying to really focus on too are these decentralized, new money system opportunities as well, and trying to back as many teams as possible doing that, because you're going to kind of see both of these systems emerge. So we're trying to place as many bets as we can on folks kind of building decentralized applications and those where folks can kind of take the do-it-yourself route on
Mm-hmm.
Bitcoin. Um, I don't know what kind of risks we'll see because I think, to your point, we've seen centralized folks, kind of get destroyed, like your BlockFi Celsius. So I'm really wary of anyone offering Bitcoin yield that is coming through random borrow activities, et cetera. I think people should be cautious. Hopefully, don't repeat the past. And that was really kind of the genesis of, and I think importance of core non-custodial staking is there's no lending activity, no risky activity. You're participating in the consensus and getting a risk-free yield. So I think, with all the excitement around Bitcoin, I'm kind of like now thinking through it. I'd be cautious about, if you don't know where the Bitcoin yield's coming from, you are the yield. You got to be pretty cautious about that. Yeah,
Yeah, no, I mean, we've seen that time and time again, and as you said, I have the scars as well, and I think it's always interesting
yeah,
because
we've been there.
yeah, and I mean, the idea of risk-free yield is always something. I mean, I remember having Mashinsky on my show at Yahoo talking about, hey man, it
Yeah,
seems like your terms of service don't match with what you're saying, and he lied, and now we're seeing that whole thing play out, and probably going to settle
yeah,
on those charges. But when it comes to essentially what's happening, I think in the restaking space is it's like putting people in control of their own rehypothecation and seeing it all play out is a very you're not eliminating risk so much as you are enabling transparency, I suppose. And it's the same thing we saw with Terra. It's like the bank run happened in real time. And just because you could see it didn't
yeah.
necessarily change the outcome. And so I guess one of the questions there, too, to extend the point, Brandon, is how should people be thinking about maybe the yield that exists on Core, on Stacks, on these things? Like, where does that yield come to assuage their fears?
Yeah, so I think it's a good question, right? So kind of like, I think I mentioned this before. On Core Chain, you're going to have a variety of different yield opportunities. On I kind of go here, right, which is kind of the low, no risk is non-custodial staking. And we actually have a dual staking system now where you can earn 10+% on Bitcoin if you stake a percentage of Core as well. And that really is risk free, other than private key risk, right? Because you're using hash time locks, which are one of the few primitive functions on the Bitcoin network. You're time locking Bitcoin in your own wallet, which you have custody to. No one else gets custody to your funds. There's no slashing risk. Even if the core network were to go down, which will not happen, your Bitcoin is locked on Bitcoin, and when the time lock expires, you get access to your Bitcoin again, right?
Hmm.
So it was designed intentionally by our team because we're Bitcoiners at heart. We wanted to help secure core chain with Bitcoiners and bring a native yield to Bitcoin. And it's really brought a lot of security to the core ecosystem. From there, most other yield opportunities are going to require some sort of trust assumption, almost like anything does in crypto, right? Whether that's bridging or using wrap BTC going through a custodian, there's always going to be some kind of risk from a third party until we find more permissionless bridging solutions, which are going to come. So I think it's just about reading the docs, being aware of what those risks are, and there's always a trade-off between yield and risk. And if the yield's higher than the potential risks, most people will do it. If it's not, which I think historically it's been in the Ethereum system, um, it just wasn't good enough for folks to put their Bitcoin to work.
Hmm. Yeah, no, I think it's been interesting to see all those things play out, and now here we are in 2025. But Brandon, to wrap up, I think we always like ending these conversations with big, bold claims, projections from smart people such as yourself. We normally look ahead, but now that it's the beginning of the year, maybe we'll just open up all of 2025. So, I mean, if you extrapolate,
Sure.
we can look back on what Brandon said to kick 2025 off. What's your biggest, boldest claim for what people might be sleeping on when it comes to Bitcoin L2s? What's a number, a theme, a call we can look back on and see if you're right this year?
Yeah, I'll make a bet here. I mean, there's been multiple reports of Bitcoin TVL flowing into sidechains this year. Some have pegged it 50 million, some have pegged it at 100 million. Or sorry, 100 billion, sorry. Million would be too small. We already have well over that. Couple like, 700 million on core alone. So, I'm kind of seeing this as, the total amount of value locked on Bitcoin sidechain, specifically Bitcoin coming on chain, grows to like 100 billion plus. Right now it's sitting at roughly, I don't know, somewhere between 15 and 20 billion. I think that that grows substantially to well over 100 billion, $100 billion. So that's a lot of Bitcoin being put to work. Tools, opportunities, lend borrow markets are all there to help support this value. And I think we're going to see better bridging solutions that unlocks more Bitcoin to come on chain and make Bitcoiners comfortable. So super excited about that. I also hope that we'll see some sort of large US buy of Bitcoin, but I have no idea whether that'll happen, but that would obviously be a huge catalyst for the Bitcoin game theory and everything else around Bitcoin, such as Bitcoin scaling solutions. So that's
Yeah,
kind of
no,
a dark horse where we'll see where that lands, right?
nobody really knows what's going on there,
Yeah.
but yeah, certainly a lot to talk about as Trump comes into office and we see what Congress is maybe able to do, or even just holding on to what Bitcoin already exists. The U.S. government has, but Brandon, Ken, thank you enough
Yeah.
for coming on. Congrats
No
with
more
everything you've
movements
done.
to Coinbase.
Yeah, we'll see what happens. But congrats to everything the core is up to. Got done last year. Excited to see how it all plays out in 2025. Brendon Sedo, Core DAO, initial contributor. Thanks again for the time, man.
Appreciate it. Thanks for having me on and looking forward to a big Bitcoin year.
Right
Hopefully we
on.
can recap this at the end of the year, see what came true.
We'll see if it happens. I think you're onto something there,
Yeah.
though. So we'll see. We'll track it as the year goes on. Brandon, thanks so much, man. Good to see
Thanks,
you.
Zach. Cheers, Zach. Thank you.